As costs are coming down now. That's the key to earnings season. It's hard to do that. It's all noise, guys. It's all noise. That's the reason we do that. That's the mentality I want you to have. All right, guys, earnings season is coming up. The end of the year happened. All these companies are getting ready to report. This is a great time. Now, one thing I want everybody to remember, I do follow earnings season, but not for the same reasons that most people do. This is one criticism I have of the US stock market system. It's too reliant on short-term data. I don't care if a company misses or hits on any given quarter. In fact, if it's a company I want to own, guess what? I hope they miss their estimates. Now, if you're new to the channel, you're probably wondering, why the heck does this guy want companies that he owns or wants to own missing estimates? Very simple. Because the market tends to overreact when people miss and overreact when they actually hit. I want them to overreact on the low side. I want them to sit there and say, oh my God, they missed by 5 cents, down 10%. That's a company I want to own. But I'm a long-term investor. If you go look at the history of all companies going back multiple years, they're not going to hit every single time. In fact, there's an old saying that if they always beat, they're probably fudging their numbers in some fashion, okay? They're probably lying in some way or shape or form, or earnings smoothing and manipulation. The point is, I want you to learn to become a great investor by sitting there and not worrying about the short run and actually taking advantage of the short run voting that the retail investors out there do. You want to sit there and find great companies at great prices. I love when major companies like Microsoft, Google, Apple, those guys miss. It makes me so happy because it's just a start for people to go, the stock to go down further. So when it comes to these earnings, some major companies are reporting. There'll be a lot discussed about where the economy is going. If you rewind back a year and a half, 2 years ago, nobody was talking recession. Now all of a sudden, and nobody was laying people off. They were retiring tons. Now what are you hearing? Google's firing. Amazon's firing people. Is Apple firing? I don't know, but a lot of people are laying off a lot of, Salesforce.com laying off a lot of people. They're sitting there saying, listen, Facebook is. They're sitting there saying, listen, the short-term horizon doesn't look great. And we need to be financially blah, 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 blah. And they give their excuse why they're laying people off. My personal opinion is they've seen the shift away from enthusiasm in the stock market, and they know they now need to focus on making more money. Because at the end of the day, if Google kept 10,000 more people, is it going to affect their bottom line by much? No. But people like seeing cost cutting because it means more money for the investors, more profit, and therefore a higher stock price. I don't personally like that, but these companies do that. But they're reacting to news. What we do on this channel is look at the market where it currently is in the economy and say, what does this mean about the future? I'm not trying to predict when things will happen. I just try to sit there and say, what does this mean? And when I see companies laying off, every single week we hear more and more companies laying off. I go, yeah, unemployment's 3.5%. It actually went lower, but is it good these major companies are starting to, because it's starting to become its own vicious cycle, its own snowball. If I'm we are a small business owner, but we tend to do better when the economy is bad. We tend to hire more people, make more money, et cetera, because we would rather be the guys who got out there and take market share from people when they're too scared to go out there and advertise. That's what we want to do. Because to us, it's much easier to get market share when everybody else is scared. We've programmed ourselves a certain way. If that sounds appealing to you, subscribe to the channel, because the goal here is to reframe your thought process. I want you to reframe what you're thinking. Instead of thinking, oh, this company killed it, I'm excited. It's like, hey, they didn't do as well as expected, but it's still a great company that makes a lot of money with a great balance sheet. I still want to own it, and I want the stock to fall so I can keep buying more shares. That's the mentality I want you to have. I don't want you to fear higher interest rates. I don't want you to fear a recession. I certainly don't. And this earnings week will definitely tell a lot of people, they're going to give a lot of indication of, oh, the weak consumer, blah, blah, blah. They're going to have a lot of garbage out there that's boilerplate stuff. It's all noise, guys. It's all noise. Just like in your personal life, if you have a bad month, if you have a bad week, does that mean the rest of your life's going to be bad? No, it's a bad month. It's a bad week. Let's say you lost your job for a few months. Does that mean you're going to be unemployed forever? No. So why are you worried about it with major companies? Just think about it that way. You have a fight with your spouse. You guys getting divorced tomorrow? No, you had a fight. Okay. It happens. Doesn't mean you won't get divorced. Doesn't mean a bad earnings number won't lead to bankruptcy. But that's why we're teaching people to find good quality companies with reasonable balance sheets that have growth potential. That's the reason we do that. Because you want to make your decisions When everybody else is fleeing, you're buying. When everybody else is buying, you're being more patient. It's hard to do that, but you have the luxury of having YouTube. We have 2,000, I think it's like 2,000 videos on this channel, and it's only 2.5 years old. I make 14 to 20 videos a week with Mo. And the reason we do that is we've realized that we have the ability to sit there and calm people down. When things are bad, calm people down. I still get comments on Instagram and Twitter. People message me and say, oh my God, Paul, you literally said this was going to happen. And it took time. I'm not trying to say because I've been saying it for years and I was wrong for a long time. But now all the companies we've told people avoid are falling harder than the market. And some companies we've bought have fallen hard. I'm okay with that. I'm fully fine that I own Meta and Alibaba, and you shouldn't buy those companies just because I own them. But watch our videos about my thought process behind them, and it'll allow you to sit there and understand better and better how to find good investments. And earnings week and earnings season is a great time to start weeding things out. Go look at the companies that are big names that have fallen hard because of a bad result. Is it really going to be that way forever? Look at the Great Depression. Not every company went under. Some companies, a lot of companies still made money, just a lot less money. But your job is to normalize those earnings. Don't buy a company just because they had amazing earnings for 1 year and you think it's going to last forever. And don't sell a company because it had temporary. Example is airlines. Airlines were shut down during COVID. I never penalize an airline for the shutdown during COVID. I can't possibly factor that time period. Shipping. Example I always give for shipping and cars. These car companies and shipping companies sold like crazy. We used to import containers from China and India and Pakistan, and we would pay $5,200 for a 40-foot container. At the peak of shipping, it was $25,000. It went up 5 times in a matter of 1 year. Guess what? Those costs are coming down now. That wasn't normal. So I'm not going to go overpay for a company just that had one really amazing year. That's the key to earnings season. Look at it and say, what's the real story here? What's really going on behind the curtain? Is it really that bad? Probably isn't. Nothing's ever as good as it seems. Nothing's ever as bad as it seems. Look at Tesla. Tesla's down 75% from its peak. And everybody's blaming Elon because he bought Twitter. My comment was, hey guys, when you thought Elon was untouchable and the most amazing person ever, now all of a sudden you hate him because all you're reacting to is the stock price. Did Twitter have something to do with it? Sure. No, it was already going down at that point. And people, when stocks, I've said this in many videos, when stocks are high flying, the second stocks stop doing that, the most overpriced ones get hurt the most and the fastest. And that's what I want you to remember. The thing I like about earnings season, it allows you to go look at stable companies and see what they're doing and how they're doing and the words they're saying and their calls and their reports. And the great news for us is every earnings season, we love it because we do daily videos where we react to earnings right there on the spot. So if earnings are announced at 4:10, you'll see a video on our channel at 4:45. So please follow our channel. I guarantee you will enjoy it and you'll learn a lot about money and investing. Thank you for your time.